Today I want to show you how you can consistently save an annual basis, especially if you're a business person or you sort of like get contracts where you get lump sum money and you have the opportunity maybe to get 200,000 or maybe 150,000, 120,000. So this plan basically allows you to save lump sum amount of money annually. So if you're self-employed and you have those opportunities of receiving lump sum money, then this plan is for you. It enables you to save consistently, even if you have short-term goals. You can save for 5 years. If you have long-term goals, you can save for 10 years, 15 years, or even 25 years. Let us look into it, and I hope it will fit your financial goals, whether it be short-term, long-term, or mid-term. Yeah? And let us see how you can consistently save, how much you need to save. So this is what I was referring to, saving annually. This is for those people who are self-employed, who get the opportunity of getting a lump sum. So if you have, for this particular illustration, you can save for 25 years and put aside 150,000, 15,385. Now, the plan comes with optional ride-ons. Yeah, these are ride-ons, these are benefits that you can pay for and add on to your policy. So one of them is the accidental death benefit. So the sum assured is the rider is equal to the sum assured. So if you notice that this plan has a sum assured of 397,000. Now, if you took the rider of accidental death benefit, you will get the equal same amount. Meaning, if you get an accident and pass on, then your beneficiary gets to benefit from the 3,807,000. And we have the second rider called the accidental hospitalization, where your inpatient bill costs are covered up to a maximum of 100,000. Now, these two riders, when you add to the basic premium, cost 373. Now, since you are paying annually, so what you'll be paying annually is 119,693. Yeah, 119,693. So that's what you'll be paying annually. Yeah. Remember, your basic premium is 115,000. Your basic premium is 115,000. Plus, when you add the riders, your annual premium for the next 25 years will be 119,693. Now, what will you get after saving for 25 years? This is what you're going to get. You're going to get 7,794,232. So this is what you're going to get. And this amount is inclusive of what? It's inclusive of sum assured payable, which is 3.8 million, and the possible bonus of 3.8 million. So if you add these two up, you get 7.7. What are the benefits? The death benefits are 100% on the sum assured, accrued plus bonuses. Then we have the riders. I spoke about the riders where you will get accidental hospitalization 100,000, accidental death benefit of 2.8. Yeah. The other benefit you get is that when you're doing your tax returns at the end of the year, yeah, remember to include this in your calculations. Yeah, remember to include this in your calculations that you have a tax relief of 17,300. Yeah, remember you have a tax relief of 17,300. Remember, you have that. You have that story. So if you have any questions, please comment in the comment section. If you need a personalized plan, a personalized code, please let me know. So in review, before we end this short video, if you are self-employed and you wish to make a lump sum payment every year towards a specific goal, maybe for a long time, maybe this is a perfect retirement plan. So you need to have to pay for your basic premium as your premium that you pay every year will be 119,693. That is what you pay annually. Yeah, that's what you're going to pay annually. Your your riders are going to cost you 4,308 plus the basic premium will cost you 115,305. So in total, what you're going to pay per year is 119,393. Now, you pay that consistently for 25 years, you are going to get 7.7 million, 7,792,232. That's your benefit. When you are doing your tax returns at the end of the year, you will get a relief of 17,308. So that is what I wanted to show you. That if you are self-employed and you get the opportunity to get a lump sum payment, yeah, so you can contribute to a policy, to this policy called with profit endowment. With profit endowment is a risk-free investment. It's a risk-free investment. Yeah? So let's look at it in detail now that we have seen how the numbers look like. Yeah? So let us look at the key features. First of all, this plan is known as the with profit endowment. Endowment policies are the best policies for taking as retirement. Why? Because apart from savings, it's a two-in-one, meaning it's a savings plan at the same time it's a life cover. Yeah, you get to have a life cover at the same time you get to have a savings plan in it. Yeah, and you'll be able to save it consistently. Yeah, that's what it means. So that's with profit endowment. With profit endowment now, when you save for a period of time, then you get a lump sum. A lump sum of money after 5 years, 25 years, or 10 years. Yeah? So let's look at the main features. So the main features of this policy are: number one, you can save to a minimum of 5 years or to a maximum of 25 years, or anything in between. Yeah? The policy payment coincides with the policy term and ranges between 5 years and 25 years. So when we say premium payment, we mean like what we are discussing today is that you make annual payments. Yeah, you're making annual payments consistently with the duration that you have selected. If it's 10 years, you'll be making annual payments that will coincide with the time. If it's 25 years, then you'll be making annual payments 25 years. Yeah. The other feature is that on death during the term policy, the full sum assured is payable to the beneficiaries, inclusive of the accrued bonuses. So that is now one of the best features. There's so many other avenues or plans or systems or opportunities to save, but this is one of the best ways of saving because you're guaranteed that whatever happens, if you're not there and you're not able to pay for your premiums, your family will be able to get the sum assured that you have selected, the sum assured for the plan, that's the accrued bonuses. That's the benefit about this one. So if you remember that in our illustration, we had this illustration where we're saying if you're saving 115,395 per annum, the sum assured is 3.8 million. So this is the sum assured we're talking about, 3.8 million. And this is what we are referring to here, that during on death, the full sum assured is payable. The full sum assured is payable to the beneficiaries. Now, the other feature is this: on survival. When you survive to the end of the policy term, when you survive to the end of the policy term, the full sum assured is payable including any accrued bonuses. So remember, this is a sum assured. I hope you're seeing. This is a sum assured, 3.8 million. That is a sum assured. This is what is payable on survival. So let's go at the bottom. Let's go at the bottom. So the sum assured is payable. This is a survival benefit pair, 3.8, and the maximum possible bonuses at 3.8. So let us go back to the brochure. It says simple revisionary bonuses are applicable to the product. These revisionary bonuses means that when the company makes profit, then the company will share the profits with all the policyholders. And then the other benefit is on surrender. On surrender, the benefit will be payable provided that the policy has been in duration for at least 3 years. Yes, the policy has to be in duration for 3 years for you to actually surrender that policy. Then there is this what we call paid-up policy. If the policyholder has an option of converting the policy to a paid-up policy, then the duration has to be at least 3 years. So we have looked at the features. So let us look at the benefits. These are the benefits. Remember the first thing I mentioned, even in my title, I mentioned that this is a risk-free investment. The capital that you invest, remember from the illustration, the 115,000, that is your initial capital, and every other subsequent year will be open. So you'll be assured of your return on your capital, plus any accrued bonuses, plus the sum assured. That is why we say it's a risk-free investment. The other benefit is that it provides protection for your beneficiaries in the event of natural death or accidental death. I mentioned this is the best saving system or tool compared to any other because it has a life cover attached to it, and you can leave something behind in case you're not there. The beneficiaries will not have to be strained financially. Imagine with a good amount of sum assured of 3.8. That's a good amount. That's a very, very considerable good figure. Yeah. The other feature is that you're able to save in a disciplined manner. Now, when you sign up or when you decide to take this plan as a saving method, you need to make automated deductions and automated savings. You can make this through your bank. You can instruct your bank to make direct debits from your bank. You can make standing orders from your bank or your financial institution. Could be a circle, could be a channel, whichever. And you can make this and you can automate this so that you can know that every other time your money comes in, your money is deducted when it reaches a certain amount, a certain rate. Yeah? And money is saved automatically so that you can have a disciplined and consistent way of saving. So this is a long-term savings. Now, the other thing is that you will be able to monitor your growth when you have automated savings. Automated savings makes you monitor your growth. Okay. The other thing is that on survival, additional bonuses are paid in addition to sum assured. Remember, I showed you this is what I'm talking about. Additional bonuses. And how much are you going to get? You're going to get 399. The other benefit is you have the option of adding additional riders to the plan. Yeah, you have the option of adding additional riders to the plan. Now, there are six additional riders. What do they mean? What does an additional rider mean? It means that you have the main policy, you have the main life insurance cover, profit with endowment. You have this endowment policy, but which is basic. But if you want to add benefit, you have 6 options to choose from. You have total disability, ETD, without benefit. You have permanent total disability, you have some benefit. You have additional death benefit, you have accidental benefit, you have accidental waiver, accidental death benefit, and you have accidental hospitalization benefit. And you have critical illness, and the last one you have the last expense. So it is you to choose which options you want to take. In this illustration, in this sample, we decided to have only 2 riders. And we had 2 riders. Only 2 riders. So we had this one, accidental death benefit, and accidental hospitalization. So this is what we took. Accidental death benefit, which is the rider number 2, which means I read it for you. On the accidental death benefit, the policyholder during the term of the policy, the sum assured will be payable to the beneficiary in addition to the main. So these are 2 things I should mention. There is a sum assured, remember, which is this one. This is what we're talking about. And then there is the main death benefits. Everything is main death. There's this one, main death benefit, and this one. So there are 2. Let's go back to the illustration. I'll show you this. Yeah. So there's this. Yeah. That's the main death benefit. And and this is the sum assured. Yeah. So what it means is that the sum assured will be payable to the beneficiary in addition to the main benefit. So that is the benefit I wanted to highlight. And the other benefit that we took this benefit. This one. So I'll show you the next one. This benefit. We took this benefit. Accidental death benefit and hospitalization. So we're going to see what hospitalization means. And it says hospitalization of the policyholder due to an accident, the actual hospital cost, and inpatient hospitalization will be reimbursed as an annual amount of 50% of the sum assured, subject to a maximum annual cost of 100,000. So those are the two benefits that we took for our illustration. So this is it. These are the benefits you can choose. You can choose this, no problem. Let me see if I have another illustration. Oh, this one's just fine. So this is it. Yeah, this is it. This is what I wanted to show you. In case you need your plan customized, this is what you get. I'll be able to show you what your benefit. I'll be able to show you what your tax relief will be. I'll be able to show you what riders you can take and add. So in case you need to get a personalized quote, please let me know. Feel free to get in touch with me. Otherwise, I am so glad and so appreciative that you took your time to wait until the end of this video so that I can clearly explain to you how it's possible to actually earn 1.7 million after 25 years, but consistently saving 119,000. You need to be saving 119,692 every year. Yeah? So until the next video, thank you so much. God bless.